Good day, everybody, and welcome to the VectorVest International User Group Forum. We're into May already. It's Saturday, May 3rd, 2025. Folks, want to thank everybody for coming out and sharing part of your weekend with us. We've got a packed show once again. As everybody knows, this is broadcast on the VectorVest YouTube channel. So please make sure your computer speakers are turned on to hear the audio portions of the webinar. And as always, the recording will be available shortly after the webinar in the same place on the VectorVest YouTube channel. All right, let me jump over to the chat here and see who we have and welcome people in. Hey, Terry from Sarnia. There's Stuart from Calgary. Marty from Naples. I won't be able to hit everybody here, folks. Lots of folks out there. There's Fred from Barrie. Neil, good to see you. Milt from Calgary. Good to see you, Milt. Jerry from Boston. There's Ruth. Oh, the Virgin Islands. We probably all want to be where Ruth is. Gil from Montreal. I'm going to start skipping, so unfortunately, if I do miss you, folks, I apologize for that. Badger from North Dakota. There's Haas from Decatur, Alabama. Lots of names familiar to me. Tom from Burlington. We've got Tony from Ottawa. Gary from Palo Alto. There's the governor. Marty. There we go. Blaine, good to see you. Gil. Jim from, what's that, Kohima. And then we've got Copenhagen with Tom. There's Vijay from Ottawa. So just kind of taking a look. Yeah, Blaine was in Liberia, Costa Rica. Alan from Australia, the land down under. So always great to see in these international forums, the international put into the international with folks from all around the VectorVest world. All right, so hopefully everybody is feeling welcome. Let's start moving the slides along here, folks, and let's start getting into the content for today. As everybody knows, there is risk in investing, so everything you will see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we've got the risk disclaimer out of the way. Put together some slides here, folks, just to help out the folks who end up having grainy video. All right, so if you'd like to fix the video quality on YouTube here, what happens is YouTube will try to automatically detect your network connection, et cetera, and will automatically select, if it is set to auto, a resolution for you. All right, so to change that now, I'm showing a Windows browser YouTube session here, but basically whatever way you're watching this, whether it's a mobile device, Mac, what you'll need to do is locate the gear icon in your YouTube window. All right, so you can see mine there. You click on the gear icon, you'll get this menu opening up, and you'll notice you want to locate the quality option. All right, you can see mine right now was set to auto, and it had picked 720p. All right, so you're going to click on quality, and there you can see some options set up there. So you can see the check mark on mine. On auto. It doesn't matter. I can change that for one video. The next time I come in and start a new video, it'll usually go back to auto. Now, in my case, and folks, this will depend on the quality of your network connection. So sometimes you might have to experiment with this. If you try to pick the highest quality and your network connection is not good enough, you will end up having the broadcast kind of drop out at times, buffer possibly. All right. But for me, the best option for me typically can be 1080p. All right. So once I click on that and select that, you'll see that down at the bottom, you'll see now my gear icon has an HD icon beside it, telling me that I'm at 1080p. All right. So for any of the folks that have issues with grainy video, it's because YouTube has selected a low resolution for you. And as long as your network, your internet connection is good enough, you should be able to up that to get better quality. All right. So hopefully that helps folks with that. Here we've got the agenda for today. Once again, welcome everybody. So we're going to take a look at the global market review and some trade ideas. And then I am joined by none other than Mr. Jim Penna, well known here in the VectorVest world, manager of retirement services. His keynote presentation will be entitled Smart Retirement Investing, Balancing Growth and Income with VectorVest. Now, Jim initially was going to do a presentation on tariffs, but I guess he rethought that. Oh, Jim disappeared on me, so I was cracking a joke for Jim to jump in on, and I don't see him there. He probably had to grab coffee or something like that. All right, so we'll be doing all that before adjourning somewhere around 12:30, and as mentioned earlier, you can see the replay. The recording will be available on YouTube immediately after the webinar. All right, same location, VectorVest YouTube channel. So with all of that said, let's jump right into the global market review. And yeah, there, Jim's back now. Jim, you're muted right now, but you missed, I was saying originally you were planning to have your keynote presentation on tariffs.
I'm sorry, I had to, there was somebody knocking at the back delivery door here. I don't know why on a Saturday, but anyway, love to be here. And yeah, we're going to keep that conversation for next time.
Next time.
Yeah.
It's something to look forward to.
Yes.
All right. So we're going to jump into the global market review here. We're going to start in Canada. All right. So hopefully we'll get the slides going here. And here we've got the color guard for Canada. Now, you know, Jim, we talk about tariffs and all the rhetoric for tariffs. Most of the markets right now, it's almost like tariffs. What tariffs? All right, so you can see the Canadian color guard there, the extended version, not one red tile on that color guard. So we're looking at about 2.5 weeks there. All right, but you can see market timing gauge at the top, one tick into the green. We're going to see a lot of similarities here, folks. So one tick into the green, guidance that reads the color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. And you can see RT Kicker confirmed green lights in the price column, quite a few of them in the last couple of weeks, even with everything going on. We've got RT very close to 1. It looked like it was going to get there a while ago, but now kind of got a little bit stubborn, is bouncing between about 0.99 and 0.97. The BSR, slow to kind of get off the mat. We have to remember that when we do have sell-offs, and the worse the sell-off is, you'll have more and more stocks with sell ratings, and they do have to transition from a sell to a hold to a buy. So, you know, during this period when the market started moving back up, initially the buy to sell ratio not really expanding out that quickly, but we are starting to see some movement there. You can see day over day, we went from 0.35 to 0.44 in the Canadian market. We were able to get the MTI above 1 on Friday. So what did that mean? Well, the MTI was above 1. As we'll see later, price action closed above our 65-day moving average. Price action was up day over day and week over week for 2 consecutive weeks. So you can see that confirmed up in the trend column. So we changed from the confirmed down to the confirmed up in the Canadian market. And like I said, we're going to see some similarities across the board here. All right. Year to date, a little bit in the red, down negative 0.41% in Canada. And take a look at the summary of our proprietary market timing signals here. Everything green, and it literally turned green just for today's presentation, folks. That confirmed call, you can see the date on that yesterday, 2nd of May. All right, so confirmed call up, our slowest, most conservative market timing signal, the signal that gets everybody into the game who hasn't joined yet. We'd be looking for confirmation of that on Monday, and then that price action to continue moving higher. All right, you can see the DEW turned up on the 28th of April. The green light buyer back up on the 1st of May, and the primary wave turned up back on the 11th of April. All right, so that's the Canadian market. If we jump to the U.S. side, here you can see a few red lights left in the U.S. color guard. Market timing gauge and guidance looking the same between Canada and the U.S., as you can see. All right, and they went directly from RT Kicker confirmed red lights to RT Kicker confirmed green lights in the U.S. market. You can see that there, and they're working off of 4 RT Kicker confirmed green lights in a row. RT up at 0.95, so we need to get that above 1. Look at the BSR. Look at the expansion in the BSR. You can see it was kind of locked in for about 3 sessions, 0.41, 0.40 for a couple days, but it jumped from 0.40 to 0.64 on Friday. You can also see the MTI was able to go from 0.95 to above 1 at 1.04, so a bit more of a buffer on the US side than on the Canadian side. So once again, that changed the underlying trend from down here to up. So Canada in an up, US in an up. The only part of the US market that hasn't joined, and maybe I'll tell a little bit of the future story here. The rest is the US is still waiting for that confirmed up. All right, and you can see there's still some work to do with the BSR, but if it can continue expanding out like it did Thursday to Friday, they could get there in pretty good time. All right, we know there's a lot of talk, there's a lot of rhetoric, there's a lot of banter going on, and yet right now the markets are, I guess, hinging on hopes. All right, so U.S. market, a little more in the red year to date. You can see down 2.44%, and a summary of the market timing signals there. As I mentioned, you can see that confirmed call has been down since the 10th of December, but we've got the DEW up as of the 23rd of April, the green light buyer up since the 29th of April, and the primary wave up since the 22nd of April. All right. Here's the summary of all the markets in the VectorVest nations. You can see Europe year to date, basically the leader, eking out 1/3% gain. Everybody else in the red. You can see the U.S. leading to the red or to the downside there. Then Australia at 1.34%, and there you had Canada negative. All of those ones negative 0.41%. All right. Jumping over to Australia now, the land down under, there you can see, again, market timing gauge needle, 1 tick into the green, guidance the same as Canada and the US. All right, and you can see with Australia, 1 red light left in the color guard so far. They went from that red light straight to RT Kicker, confirmed green lights, are working off 2 in a row there. They've got RT right at 1. So needs to push a little bit higher to get above 1. Good expansion of the BSR there from 0.44 to 0.52. So that one really starting to move on the Australian side. And you can see the MTI started operating above 1 on the 1st of May. So on Thursday, and already up to 1.08. So it's moving up quite nicely. They got their confirmed call up signal on the 1st of May. All right, and you can see up, up there as well, up, and away. So there's the year to date that we mentioned on the previous slide. And there's the summary of the market timing signals in Australia. So we had the confirmed call up, as we mentioned, from the 1st of May. The DEW turned up on the 29th of April. Green light buyer up since the 1st of May, returned back up on the 1st of May. And there you can see the primary wave turned up on the 23rd of April. All right, that brings us to the European Union. So here you can see, this is where we deviate a little bit. Market time engaged needle, 3 ticks into the green over in Europe. And the guidance reads, the color guard is bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So we had seen the European market outperforming from about, I think it was late last year, from about the fall into the end of the year. And they did pull back like everybody else, but you can see already no red tiles left in their color guard. They're working off of 1, 2, 3, 4, 5, 6, 7 green lights in a row. And of those 7, 5 of them RT Kicker combo confirmed green lights. RT operating above 1 at 1.08. And look at their BSR already up to 1.77 on the European side. The MTI already up to 1.31 in that market. All right, so in an up situation, obviously there as well, short-term uptrend in an underlying uptrend, and you can see their confirmed up signal turn back up on the 29th of April. So they were the only ones year to date on the plus side, as we showed before, up 1/3%. And there's the summary of their market timing signals. So confirmed call, 29th of April. DEW turned up on the 23rd of April. Green light buyer turned up again on the 23rd of April. And there you can see the primary wave turned up on the 14th of April. So a lot of green there. The only one we're waiting on is the US to have that confirmed call signal change. If the markets can keep moving to the upside, keep, I guess, ignoring the negative news out there, and there's lots of that, and concentrating on positives, I guess. And we'll see where this rally can go. But we will see, and let's get into that now. Looking at the market timing graphs, that a lot of the markets are at pretty good points. There's always a cautionary tale here. So we have to make sure everybody's aware of that. Looking at the Canadian market timing graph, you can see cautionary tale is going to be, so we've got support and resistance on here. You can see price action right now in between resistance right here at this level and support here. But we also have the 65-day moving average. And, the late, great Dr. DeLito put that on some of these market timing graphs for a reason. All right. When we operate above the 65-day, it acts as a good level of support. You can see in the Canadian graph here how back in this area, you will get fake out breakouts or breakdowns in this case. All right. And then you can see how quickly the market came back above the 65-day and would come back, retest, continue moving up the page. Another bit of a fake breakdown here, back above. But in this area here, we started operating below the 65-day. So when we're operating below what was support, starts acting like resistance. So you can see in the Canadian market, we came through. We've actually got the candle up and closed above the 65-day. we're going to want to make sure we get follow through to that. All right. And this market continues to move and that we don't end up with a bit of a fake out breakout. If we do get confirmation and continue to move, you can see how closely we are into this resistance zone here that we'll need to push through to be able to challenge our previous swing highs from earlier in the year. All right, but you can see visually here, market or the MTI just got above 1. All right, price action just got above the 65. RT flirting with 1 here, and the BSR really needs to expand out, telling us more stocks are getting buy ratings and hopefully broadening the existing rally out. All right, it's kind of amazing when you look at this, how many up days we've had through this period. All right, so that's Canada. Here's the United States. Okay, so we mentioned they're still waiting for the confirmed call there. Here you can see price action operating between support and resistance here as well. And a pretty good level of resistance that they're coming up to here. You can see all the touches in this area where it was resistance before. You can see where it acted as support. A little bit of a fake breakdown here. All right, short-lived before we actually got the breakdown. And there you can see once you break down, there was a retest of what was support, now resistance in that area before the market broke down further. All right, so we're coming right back up to challenge this resistance zone again. On the US side, you can see they just broke through resistance here too, pushed through that on Friday, had a pretty good candle. So we'll see how things play out here. But you can see with them, the MTI, the only indicator above 1 there. All right, next we move on to Australia. So Australia is another one of the markets with the 65-day moving average on the market timing graph. So you can see the confirmed call that turned up for Australia 2 sessions ago. And in their case, Canada, they challenged moving average. The wick went through it, but they were pushed back intraday. All right, and weren't able to close above it. So here they are in between resistance here, pretty good level of resistance there, support right here, but also having to deal with resistance from the 65-day before really challenging this level here. All right, and you can see the MTI operating above 1 there, still work to do on the buy to sell ratio and RT. Now, the European Union next, you can see the 65-day moving average on their graph as well. We've got price action. They've got some pretty close areas of support and resistance. All right, we've got support right here. And in 1 day, you can see the session previous, I think they were closed. There must have been a holiday in Europe, I think Thursday. And the market was back open Friday. But you can see they came in, challenged this level here. We're able to break through that nicely. All right, but very, very close to another level of resistance right here. And I would say that their 65-day is probably within the zone, that resistance zone. You can see, like Australia, the wick came up. Didn't get through, but looks like it came right up to the 65-day before price action being pushed back. All right, so like all of our other markets, they're going to need to push through this level, get confirmation, and then have to deal with some fairly close resistance after that. That's the way the cookie crumbles when we've had pullbacks like this. Once the market starts moving, typically there's quite a bit of overhead resistance that needs to be dealt with. Now, if you have true blast off periods, usually you're slicing through that resistance pretty quick. But I think everybody agreed that this didn't play out like one of those great traditional blast off periods. Once we did seem to hit a bottom, at least for the short term here, right back in this area. All right, and then you can see MTI buy to sell ratio and RT visually on the graph, all operating above 1, and at least as far as the VectorVest market goes, the European Union looking better than the other ones here from a graph perspective. All right, so that's the market timing graph for all the VB nations, color guards as well. Next, we'll take a look at what's been going on with the global market tracking ETFs. We've got the March performance as well as the April performance for comparison. Now, the global market tracking ETFs are found in the US software. All right, they can be found in the watch list viewer under cherry picking. So we can see, and we covered how they played out in March. There were 25 winners, 18 losers. All right. We could see the market was down. The VBC was down 4.44% in that time frame, and this basket outperformed the market quite nicely with a gain of 0.56. So another month goes by. The situation has changed here a little bit. We've got out of the 43, we've now got 34 winners, 8 losers, 1 even. And you can see there's been a change in the top 10. We've got some of the same players in there, but you can see Mexico now at the top. Isn't it interesting that Mexico and Canada seem to be the first ones kind of hit and maybe hit a bit more in the beginning? I know there were reprieves, all of that kind of stuff, but here you have Mexico at the top of the list with 11.79% gain. You've got Spain, Germany, MSCI Europe, Philippines, Greece, Israel, Poland, Australia, and Malaysia, all rounding out the top 10. So with this scenario here, you can see the BBC was down a negative 0.23%, and this basket outperformed nicely here as a basket with a 2.68% gain. All right. Let's go next to, that'll take us to, so we've got the same image on the left from our previous screen. Now we're looking at year to date for the global market tracking ETFs. So you can see how they performed year to date. So as a basket, nicely outperforming the VBC. The VBC down negative 0.244%, and this basket up 10.94%. You can see the leaders there, Poland, Spain, Greece, Germany, and Chile, rounding out the top 5. And then you can see Mexico, so Italy, Mexico, Brazil, Eurozone, South Africa, rounding out the top 10 there. And from South Africa up 19.76% to Poland up 44.18% year to date. All right, so as they always say, there's always a bull market somewhere. And you can see with these different country or global market ETFs, we do have the opportunity to track these in VectorVest, and some countries continue to perform while other ones don't. But you can see right now most of the basket moving to the plus side. All right. So that's the global market tracking ETFs. Whoops, hit the wrong arrow. Now we'll take a look at the market sector ETFs. So these are specific, also found in the US software, but these are specific to the US market. All right, so we've got year to date here. I think everybody's well aware at this point that gold has been a pretty good performer through this time frame. We have seen pulling back of late, but no surprise to see GDX continue to be at the top of the list here. You can see year to date, it's still got a 38.84% gain, even though this past week it's given some of that back. You can see utilities coming in second. So we've got utilities, consumer staples, financials, and next gen media and gaming rounding out the top five. All right, but definitely GDX stands out tall above all the rest at 38.84. The next one is at 5.36% gain. You can see there's 30 of them, 14 winners, 16 losers. So hasn't been great year to date at this point. You can see the top 10 here, and you can see that they've underperformed a little bit. We've got the BBC down the negative 0.24, this basket down a negative 0.285%. Looking at the top 10 gainers, or the top 10-day gainers from the last 10 days, to see if we can see who's moving there. You can see semiconductors leading the way here. It's been a tough haul the last year or so for semiconductors, so you can see them leading the way. There you can see Spotter Trust SBI in second. There's the S&P software coming in third. Got clean energy, kind of interesting to see clean energy coming in there fourth, with a change in administration on the US side. And then you can see that next gen media and gaming here coming in fifth, rounding up the top five. And we've got the top 10 in here. So we've got regional banks, consumer discretionary, consumer services there. You've got Spotter Industrial and home builders rounding out the top 10. All right, so that gets us through that part. Next, central bank rate announcement. So we have April behind us. The last one we were kind of waiting for there. Well, overall, to summarize this, Canada and the European Union were still lowering. US didn't have an interest rate decision there. They'll be coming up. So we'll see how that one plays out. Yeah, the main ones that we track here, Canada, they actually held. European Union cut in April. Then you had, we didn't have England or Great Britain, so Japan held the very last day of April there as well. All right, going into May, you can see the US Fed coming up on the 7th, this coming Wednesday, with their interest rate decision. And then the other main players we'll be tracking will be the Bank of England the very next day. We've got Australia coming in on the 19th of May. We've got the FOMC meeting minutes Wednesday, the 28th of May. So that's the main central bank rate announcements we'll be tracking through May. All right, not a very active May for sure, but of course the US being the main player there. All right, another great week of VectorVest essays, folks. So a great roundup here. I've got them summarized for everybody here. So hopefully over the weekend, you'll be able to read as many of these as you can. If you do see something of particular interest to you here, you can go into that country's software, go into the viewers tab, go into the views from last Friday, and catch the essay there. But quick summary here, out of the US, Angela Akers wrote one entitled The VectorVest Earnings Analysis. All right, so how to use VectorVest earnings analysis and GRT, growth rate, to be able to anticipate future prospects of individual stocks. Out of Canada, Don Reitzma wrote one entitled The Market Continues to Recover from Tariff Terror. We'll coin the term there. How to use VectorVest to help analyze current market conditions and stay informed, stay on the right side of the market. European Union, Susan Hayes Colleton wrote one entitled, "What does a sell recommendation really mean?" So how to use the VectorVest sell signal to aid in decisions for stocks in your portfolio. And then Out of the Land Down Under, Robert and Russell Markham wrote one entitled, "The Market is Breaking Out." And yeah, something that everybody's been waiting for. So how to use VectorVest to ensure that you're ready to put your trading plan in place once you receive your market timing signal of choice. And we have seen how, at least everywhere else but the US market, we've got that slowest, most conservative. We got all of the market timing signals up at this point. All right. So that's the essays. Another great week of essays, folks. Check those out. Lots of good information in there. Here is the May Almanac. So we're 2 trading days into May, according to the Hirsch and Mistel's 2025 Stock Traders Almanac. November through April are the best performing months of the year. And at this point, with only 3 trading days left in that period, the VBC was down at that point 4.6%. So May is hailed as the first month of the stock market's worst performing 6-month period. But the VectorVest Almanac shows that over the last 29 years, the VectorVest composite has gone up more times than down. Average gain of the 18 positive Mays was 2.90%. Average loss of the 11 negative Mays was 3.97%. Right? So even with a 62.1% chance of a winning May, the reality is that we do have headwinds. We know that we have lots of headwinds to contend with in the way of global trade, etc. Nevertheless, I only sell in May and go away when VectorVest market timing signals tell me to. So either way, I think we're in for an interesting month. So that from Angela Akers' essay as well. All right. So, and I don't think the sell in May and go away has really worked out the last number of years. But of course, individuals deal with that in different ways. Here's the earnings update from Angela as well, from her essay this week. So we are in Q1 2025 earnings season. This past week was a huge week. I think it was about 1/3 of the S&P 500 reported. So you can see as of Friday, 72% of the S&P 500 companies had reported Q1 earnings, 76% beating the bottom line, 62% beating the top line. All right. So, but a lot of forward guidance issues and a lot of companies pulling their forward guidance altogether. So we'll see how that continues to play out. All right, so that takes us into trade ideas. One of the things, just looking to see how we're doing for time here. All right, I think I'm going to jump right into that. I'll start on the Canadian side here. Maybe I'll talk about it really quick. So sometimes, especially for newer folks, when the markets, when you first start with VectorVest, obviously the market timing signals are in a certain condition at that time. When we have a pullback like we just had, we get to a point where, if you've kind of seen the market timing signals go out of sequence because the market's going back and forth, because of this recent pullback we had, we now got an opportunity to see all the market timing signals fall into place in the proper sequence. So we had the market pull back. The first thing we're looking for typically is the primary wave to turn up. And I think we mentioned that turned up in the Canadian market. I'm showing the Canadian market here. So it turned up, I think, on the 11th of April before our extended version comes in here. All right. Once the primary wave turns up, then what are we looking for? We're looking for a green light in the price column. So you can see in the case of Canada, we got that green light on the 22nd of April. Then we're looking for follow through to the green light. Well, we happened to get the next day follow through to the green light, as well as the next signal coming in here, and that was the GLB RT kicker, and it came in conjunction with the RT kicker combo. All right, so we saw the progression from green light, GLB RT kicker, RT kicker combo timing system, and then right through to eventually on Friday. Oh, sorry, the DEW ended up turning up. Believe it was the 28th of April. All right, so it came into play, and then on Friday, the confirmed call up. All right. So kind of nice to be able to go through and see everything come in place in the order that they typically would in that scenario. All right, so I'm going to go to the viewers tab here. We're going to go to the watch list viewer. So you can see in the Canadian market, so I took a different approach in some of the markets here. So we're going to have a bit of a difference. So I've got the MPI 3-day in the Canadian market. And let's just bring our graph over here. So we're not going to be getting the best of the best. This was strictly pulled out of the MPI 3-day. I do have the MPI layout on here. All right, so those that aren't aware of the MPI layout, we have 2 moving averages on the bottom, 2 moving averages on the top. All right, so we've got the 5-period moving average and the 40-period moving average of RT on the bottom. And we've got the 5-period moving average and the 40-period moving average of stop on the top. And typically, the way this works is we kind of look at the bottom as the trader's signal, and we look more at the top as the investor's signal. All right. And the trader signal is typically what we're doing is we're looking for that 5 moving average of RT to cross the 40. You can see that's happening right here on, in this case, Quebecor, ticker QBR.B. They're in the business service printing industry. All right. You can see that they've already got the crossover here. So we call this crossover trigger. And in the normal progressions of things, we'd see the trigger happen first and trend wouldn't be in place. And in this case here with Quebecor, we're just about to get trigger. You can see trigger broke down in this area. We're about to get another trigger crossover, but this stock didn't pull back enough for it to lose trend, which is one of the reasons why the top graphs are used more for investors. While a trader may have exited the position here, an investor may have decided to stay in because our moving averages on the top remained in position. All right. So when we have the crossover of our 5 moving averages stop crossing the 40, we call that one trend. All right. So with Quebecor here, we are just getting another trigger cross. And you can see we're right at, I'm going to take off last close here. We're right at resistance of this swing high here. You can see that's the area we're trying to deal with. So if the overall market continues to move, we'll see if we can break through resistance here, get follow through, and continue to run. All right. Going next to the next one. One that was performing very nicely. You could see earnings were moving up nicely, kind of tailing down from about $5 into probably around $4.90 there. But you can see how long trend was in place with Gildan Activewear. And you can see they did pull back through all of this tariff. Well, as Don mentioned, tariff terror. It was a bit of a terror for Gildan. All right, but you can see that they did find support down here, and they are bouncing. You can see there's a trigger cross. Here's one you can see where trend has broken down, so that 5 moving average stop below the 40, but you can see that 5 moving average stop starting to curl around and take another run. So we've got a trigger cross. It is trying to bounce, had some nice moves. You can see earnings behind it now 3 sessions ago. All right. So let's jump over to the US next. And I will have to pick it up a little bit here to make sure that we give Jim the time. Whoops. So the US, I went with the Midas Touch, VST divided by RT. And if we graph all of these, you'll see some nice earnings pictures here. Earnings running up nicely, bottom left to upper right. And I do have the MPI. I'll leave it on. We're not using it in this case. I did mention the search used, but you can see trigger still in place, trend still in place. And in this case here, we're looking at WRB, WR Berkeley Corp. It's an insurance property casualty. And you can see them right now trying to break through a level of resistance. They do have, this intraday spike. Let me just make sure we are in earnings season. So I want to turn the earnings on there. All right, so you can see they do have earnings behind them. So we'll see if they're able to get confirmation of breaking through this resistance level, continuing to run. Maybe I'm only going to show a couple here. I do have a few. So there you can see Kroger. You can see its earnings picture here. Both trigger and trend in play. Once again, a bit of a pullback, and they're trying to bounce and dealing with trying to get through past swing resistance here. All right, let's jump. Maybe I'll just show you the other ones quickly here. Berkshire Hathaway, same picture, trying to break through resistance at this level. Still have trigger and trend in place. There's McKesson Group, so drug wholesale. You can see their earnings picture starting to tail off a bit. Looking for another trigger crossover. Trend is in place, but they are the same situation. Just dealing with resistance here, kind of consolidating, waiting to see whether they're going to be able to break above. All right, let's go next to Europe. So we'll go to the European Union. So European Union, I used new buys. So there's so many different ways to build watch lists in VectorVest. I'll graph all these. I might just, let's see here. Yeah, so many different ways. So new buys, looking for stocks that are transitioning from a hold to a buy. In this case, so you can see earnings looking nice on UCB.BR, right? Drug generic. You can see they pulled back with all the tariff, all the overall markets pulling back. They've got a trigger cross. I didn't use the MPI, but they do have a trigger cross. They don't have trend yet. You can see the 5 moving average of RT moving up. And like the other ones, they found support, are bouncing, and are going to have to deal with overhead resistance. If you can get through overhead resistance and get confirmation, you could definitely look at that one. And there's Buzzy Unichem, so BZU.MI, building cement. So earnings looking pretty nice there. And you can see that new buy rating. You can see how they ended up finding support down in this level, bounced. I didn't have earnings, so there's their last earnings back there. They're trying to bounce, and actually as of Friday, they were able to gap up above this old top here and here. All right, so through resistance there, and if they can get follow through, could take a run at their previous high. Here's Unicredit, so UCG.MI. Okay, earnings looking nice on that. Very close to getting a trigger crossover. They did get trend before trigger because there was just a shallow cross here. And you can see with them as well, they found a level of support. They pushed through resistance here at this level. And you can see they're trying to find support at that level, see if they can bounce and deal with the old swing highs there as well. And there's WBD.MI. We build building heavy construction. So there's their earnings picture, trigger crossover, trend crossover. So just like the other ones, found support running, just dealt with a level of resistance right here on Friday. See if you can get confirmation of that and possible run to challenge the old swing high there. All right, so that'll bring us into Australia. So Australia, I'm going to go with the Midas Touch VST divided by RT. A couple players there. And as I mentioned earlier, we do know gold had a good run. So here's a materials gold stock. All right, we know gold has pulled back of late. You can see the earnings picture here. You can see they still have trend intact from an NPI perspective. Triggers broken down with this latest pullback. They pull back to a half decent level. They have to rely on the underlying. You'll see if they can find support there. If the underlying finds support and runs, see if Regis Resources, so this is RRL.AX in the Australian market, see if they can bounce from there and take out the previous swing high. And this one, you can see FWD.AX Fleetwood Limited. This is consumer discretionary autos and components. Earnings picture on that one. You can see they've got a trigger crossover back in this area here. After that pullback, trend has been intact for a while here. Looks like back in February. And this is one where they've kind of consolidated, put in a new at least 52-week high, kind of been consolidating the last few days. They did get a new 52-week high on Friday, so you'll have to see which way they decide to break from consolidation there. All right, so with all of that, that brings us to Mr. Jim Penna. So he'll be given his keynote presentation, balancing growth and income with VectorVest. So over to you, Jim.
Hey, Rick, thank you. I don't think I've ever been introduced to do a keynote presentation. I like the way that sounds. It's pretty cool. All right. Thanks, everyone. I'm going to see if I do this right. I'm going to hit share my screen, and hopefully you guys will see my screen. Did that work? I think it has. Somebody let me know if that worked.
Looks like you're good.
Okay, great. All right. As always, Rick, fantastic information. Thanks for taking the time to do that. I'm going to comment just real quick on that last NPI. Using that graph and using the NPI is such a great way to. Hey, Carol, how you doing? Such a great way to use entry and exit points. And I always love the way Stan used it when the RT cross trigger came, you build perhaps half of your position, wait for the stop criteria to also trigger, and then build your full position, and vice versa if one crossed. I always love the way that he showed that and kind of turn it into I wouldn't call it trading because it's not something that moves every day. But anyway, I just wanted to comment on that. I thought it was a great stuff using the NPI graph. So with that, what I want to do is talk to you guys today about this presentation. It goes to what we do here in the retirement services department here at VectorVest. It's all about safety. It's all about growing your portfolio. First and foremost, actually, it is about preserving your retirement capital. So a little bit different, right, than being a little more active trading. Doesn't mean you can't trade, but I'm addressing those who are looking to build and grow more of their retirement income using a more prudent / conservative way to do that. So I was thinking earlier as I'm getting ready to present that the way I'm looking at it is if halfway through this or at the end, you get bored listening to this basic way to do it, I feel like I'm doing my job. right? Because we're not, we're not day trading for nickels and dimes here. We're not even really swing trading. That's the mindset I'm bringing into this. So I want to give that to you guys first and foremost. So hopefully we can get through this. Why growth and income? Well, a couple of key points here. I like to talk about income provides cash flow during retirement. It's a very important thing. I see these headlines, read these articles about can an individual who retires, I'll just throw a number out there. You have $1 million. Can you retire with $1 million in your nest egg? And there's always the answers that come after that. But I say, are you saying that that's the only million, that I can't grow that $1 million safely or provide a safe income on top of using that? Again, whatever the number is, I'm using $1 million. Okay, because that's usually the stories that I read. Anyway, income provides cash flow during retirement. Growth helps offset inflation and grows wealth, but I want to be very careful on how we allocate depending where we are in retirement, whether we're approaching it, whether we're in retirement, how far you are into retirement, right? So, growth may not always be the best step that you want to take, or at least allocate a little less of your assets toward it. Always, we want to reduce risk and improve consistency. I don't care if you're trading for nickels and dimes or if you're trading in your retirement account. We reduce risk, and for those here who know me, means high RS stocks. I don't care if I'm day trading, which I do, or if I'm managing my retirement portfolio. High relative safety stocks, low risk stocks are all that I deal with. And again, this all has to align with your long-term retirement objective. Okay, so that's what I'm going to talk about. Hopefully you guys are into that. Let's go ahead and do it. Again, key takeaway, growth and income means a resilient retirement strategy. Remember, VectorVest simplifies stock selection and timing. Okay, this is really the key to what I'm getting at today. I've been here at VectorVest for 18 years. I worked on trading desks for a good 10 or 12 years before I came to VectorVest. Okay. VectorVest simplifies it. And for the type of investing, or even if you're trading, but VectorVest simplifies it for you. So these aren't, my techniques that I created here. I simply took what Dr. DeLito taught me and showed me in VectorVest and personally taught me on how to do this, right? Anyway, balance is a key. It adapts over time, and you got to stay informed. So that's what we're looking at. To wrap it up, I always love this quote from Warren Buffett. The interesting thing about investing is that it's not like the Olympics. You don't get any extra points for the fact that something is very hard to do, right? Like if you're a diver or a figure skater, right? So you might as well just step over 1 foot bars instead of trying to jump over the 7 foot bars. I always love that quote, and it just brings me back to what VectorVest is all about. It doesn't have to be hard to do to be successful. Quickly, I'm going to go through slides quickly, and then I'm going to go into the program and talk about through each program that we have, and for the EU, Canada, Australia, and the US. I'm going to show you, because this is the international forum, right? This is universal. What we're talking about here. I know many of you, I know Terry's been through this. A lot of folks who are in the room may have been, but we talk about the 3 Ps, or the 3 core principles of retiring with peace of mind. It's profit, which is growth; provide, which is a steady income. And I'm only going to talk a little bit today about protective puts and covered calls, because I'm talking more about building and managing your portfolios. But I'll comment briefly at the end. But it's also a very important, well, to me, the most important aspect of building and managing your portfolio, right? Nothing's going to go straight up, but we want to eliminate, the roller coaster ride as best we can. I don't want you just having, hey, there's a good dividend stock, right? This what I do using VectorVest here for retirement is not pick a stock, right? It's to build a portfolio and manage that portfolio, not just random stock picking and saying, hey, that looks like a good candidate. Now, there's a lot of room for that in your portfolios, but not really what I'm doing here. Anyway, I don't want you to have a couple of, dividend payers that just get a couple of bucks. We're talking about providing a safe, steady flow of income. We also, at least on the U.S. side, I know it's harder in some of the other markets to sell covered calls, what we call now in our coaching group the side hustle, right? The ability to sell covered calls to generate income. We'll talk a little bit about that. Again, just another reminder, the strategic investment matrix that Dr. D used to talk about all the time. You've got your speculative, aggressive, prudent, and conservative. Right? We fall right here. We want low risk and high reward. That's what we're looking for. I'm going to share with you, right? It says low risk, low reward here, but I'm going to be going into the conservative folder in the Unisearch tool to show you that, you're going to have to decide what is low reward and what is, a really good, good return on your portfolio. And I'll say this when I go into the portfolios, if you're looking at, again, over time, right? And there are going to be market conditions where you don't meet these returns. But if you're over time have an annualized rate of return in the upper teens, the lower 20s, mid 20% range for your average annualized rate of return, you need to ask yourself, is that good enough for you? Is that good? Because if you don't think it is, I want you to send me an email because we got to talk. Right? 23, 24, 26% annualized rate of return over time in a retirement-minded, prudent portfolio is really good. And if you don't think it is, I'd love to chat with you. Anyway, let's keep moving. Relative safety. It's an indicator of risk. Okay, consistency and predictability of financial performance are the primary factors. Virtually everything I do in this program is based on relative safety. I did my first strategy of the week or special presentation 17 years ago was on relative safety. I've done about 10 of them since. So it's really an important number for me, how we analyze the risk of an underlying company. Okay, and again, whether you're trading or whether you're not. Dr. D always said intelligent investment decisions cannot be made without including a knowledge of stock safety. Don't let stock safety be your missing link. I'm going to walk through some searches. What I'm going to share with you is breaking down those 3 Ps I just talked about, ruler stocks and premier growth stocks. Now, listen, there are others. There are good quality growth, profitable searches out there. These are the 2 I stick with. Maybe you have ones you like, as long as they bring good quality stocks that are rising in price in a rising market. And when I say quality, I mean good solid fundamentals, along with comfort index is a big indicator for me as well. I'll talk about the blue chip dividend payers, which is for that second core P, which is provide income. And then I'll talk about, and again, this goes for except for blue chip dividend payers. This doesn't go in the EU or Canada or in Australia, because I created this search. It uses the S&P 500 and Dow Industrial Stocks, but I have also run a couple of quick tests, and it will show you some great dividend searches and investment plans you can use as well. And then over the last year, what I've really come to think is a very important part of building, managing, allocating whatever equity you're going to allocate to the equity markets. These are a couple of searches out of the conservative folder where what Dr. D used to call the best of both worlds. Okay, he used to talk about, capital appreciation as well as collecting the dividends, right? And then, these are the 3 aspects. Now, it doesn't mean you have to build a portfolio of each of these. You can cherry pick through however you want, but this is just the core of what we like to do. So profit comes from owning companies with consistent, predictable financial performance. I'm going to go through these. This is just a screenshot. Ruler stocks, earnings, and I'll just talk about the key indicators here. It's found in the prudent folder. Earnings growth rate has to be greater than or equal to 14% per year, and the stock's relative safety on the 0 to 2 scale has to be 1.4 or greater, which is considered excellent on the 0 to 2 scale. That's how we, those are the 2 key indicators in the ruler stock. And then even enhance that even more, it takes relative safety times the earnings growth rate and sorts those stocks in that order. Okay. Then quickly, Premier, and I'm going to go into the program, Premier growth stocks. Here, again, earnings growth rate has to be greater than or equal to 14%. Also has to be larger cap companies, which ruler stocks are as well. But I've always loved this sort. VST, times relative timing, times the comfort index. And that's how these are sorted. So another great growth portfolio. Now, I'll be honest, in the drawdown that we saw through April, and in fact, back since December 10th of last year, when in the US side we got the confirmed down, if you were using any entry point other than confirm call, we did see some drawdown. And so again, with the ability to grow your portfolio is going to take on some risk. And that's why I don't like, if you're close to retirement, if you're in retirement, you got to allocate, you got to be smart about your allocation, where you're going. I'm going to jump into the program. I'll start with the US program. And like I said, I'm going to go through all of them here. As Rick showed, we have our green light, our RT kicker combo has confirmed that light. We haven't gotten to the confirmed up call. So a lot of our model portfolios, or several of them, specifically ruler stocks, has not added positions since December 10th. Right, we're in cash now in that particular portfolio, but we're getting there. Right, the buy-sell ratio finally had a nice tick to the upside yesterday, and Rick alluded to it. Right, the sell has to become the hold, which then has to become the buy. It was only about a week or 10 days ago. Sells and holds were both at around 4,000 each, and so it takes time. But the buy-sell ratio finally on the U.S. side starting to move. MTI, big move yesterday as well. All right. So I showed the search. It's in the Unisearch program, in the Unisearch tool, rather, and under prudent. These are the top 10 stocks. My screen's acting a little weird. Sorry about that. But it gives the parameters. And you can see right now, NVIDIA, Stride, we just did in our coaching group, closed it already. One day, did a buy right to generate income in the retirement coaching group. It closed it already because it met our number already. But you can see that, Fortinet, another one, we got a trade going on in that as well. Good quality stocks, relative safety. Generally, when you see high RS numbers up here, all of the other numbers that I care about will 90% of the time fall into place. So growth, relative value numbers are very high. If I scroll over, you'll see earnings growth rate. Look at those earnings growth rates. Okay. And ruler stocks usually don't pay off much of a dividend. So, but we're not really worried about that here. But those are the type of stocks that we're using in the ruler stock portfolio. Right? Good quality stocks. The comfort index, with one NVIDIA, has been volatile for a lot of different reasons, but you see a good comfort index too. Right? The company's ability to withstand severe or lengthy downturns. That's what comfort index is. Okay, so that's what we're looking at when we talk about ruler stocks. What I want to do is come in. I'm going to start with the back tester. I've run some back tests in each program, and we'll start with ruler stocks here. Now, I have 5-year, 3-year, 7, 10-year ruler stock portfolios, and you can go back and back test it wherever you see fit over a certain time frame. And go through that. I'm looking at the questions as they come in as well. If you can hold off, I'm going to get through this because it's pretty straightforward. And then, Erwin, it's a great question, but maybe you'll see as we go through it. I can try to answer that question as we go through. Anyway, I started these back on January 2nd, 2024. That's one of them. 43% return. Yes, there's drawdown, right? When there's growth. The great thing here is that we extinguished our positions because we didn't buy a stock. We haven't bought a stock in this portfolio since December 10th. Right. And again, this, with all the volatility we've seen, that may sound boring to you, right? But you weren't getting in there. You weren't being whipsawed around. You were able to not have that worry at night because the positions were moving into cash. And again, on the US side, we do a lot of protected puts and selling covered calls. So we're able to mitigate a lot of that drawdown as we go through. Okay. Let's take a look at the portfolios here quickly. If I go to ruler stocks, I can show you right now, this is a longer term version of the ruler stock portfolio. We use confirm calls. I use Profit Locker Pro in this particular portfolio. I'm also a big believer in using rec equals sell as your stop criteria. Okay, so I'm looking at the confirm calls, and we are currently, again, this is over time, we're up 223% since January of 2017, and we are currently in cash in this portfolio. Okay, so again, when I talk about the return here, that's a low to mid 20s annualized rate of return. Yes, we had some drawdown back in 2022. Part of that is because we bought the morning after a confirmed call, and the market opened down fairly dramatically, but the portfolio manager bought the stock. So in the real world, I wouldn't have bought those stocks because the market was down. Premier growth stocks, very similar. We did have the drawdown. Again, this is where you're going to see drawdown in the growth side, but same time frame, up over 240% here. Over that time frame, I've got shorter term premier growth stock. This is just since January of 2024, up over 50%, up nicely in yesterday's trading. I'm showing you these because it doesn't get any more basic in the VectorVest program when we build and manage these portfolios using whether it's Profit Locker Pro, prudent, 15% trailing stop, rec equals sell. The idea is to be able to give your positions the ability to grow. And again, we don't want it to be a trading account. So yeah, we will suffer a little bit of drawdown here and there, but over time, historically, these portfolios have worked really well. So that's the power of combining, right, the growth and the income. I didn't get to the income portion yet, but we will in a moment. So I wanted to show that. Let's go back into the slides real quick. And so I talked about premier growth and talked about ruler stocks. Let's go into some of the other, and this was kind of the hope I was trying to get across here, is that I wanted to, let's go to Unisearch. I wanted to go through, I'm sorry, I don't know how to get rid of this. The Teams thing is in my way up top there. I actually wanted to go to backtester. So I went through a couple of quick back tests. I didn't talk about pale blue chips. Let's start with the ruler stock. So in the EU program, just to show again that high relative safety, good quality safe stocks, I ran the same time frame on our back test here, right up till yesterday. So January 2nd of 2024, we're up over 25%, right? That's an annualized rate of return of over 19%. And I run a quick test on the overall markets there, but I didn't do it this time. But if we take a look, again, we've got drawdown, we've got, some sideways movement, but for your growth portfolio, the drawdown is there at 14%. It's a compounded rate of return at 18.5%. But over the market activity that we've seen over the last not quite year and a half, that's a pretty good, darn good return coming out there. I'm going to come back to pale blue chips. I'm trying to keep this organized here. Let me go to the Australian database here. Let's take a look at the back tests I did here. I did more than a couple here. I want to focus still on ruler stocks. I use different entry points, right? Depending on when you want to get into the market. Green light buyer. Again, use the same date. You can go back and test these any date frames that you want. But January 2nd of 24, you got another one, right? 19, and 15% return on investment, right? We've had a nice uptrend in the market over the last year and a half, we've had certainly a whole bunch of volatility. And these numbers, depending on when you get in, whether it's green light buyer, DEW, confirm calls, we've got some pretty good returns coming using these all used, I believe, used rec equals sell. We used rec equals sell as our exit point in each of these. I just changed the entry point. Okay, so now I'm in Australia. I showed EU. My point here is to show that ruler stocks work because of the formula and the equation that goes into high RS stocks. Okay, that's our goal. I'll come back to these others. Let's go one more to, what didn't I do yet? I did Australia, EU. Did I do? I did Canada already, I think. I think I did. So here's ruler stocks on the Canadian side over the same time frame. 60% return, annualized rate of return, over 45%. Yep, there's drawdown there, but we manage that drawdown. So I know the question may come up, well, you know, what about, there are time frames, right? Late, what was it, 2021, 22 into mid to late 23. Yeah, you go ahead and back test a growth portfolio, at least on the US side, and the returns are not going to be, you know, as robust. But again, the idea here for the more prudent investor is over time for you to grow your portfolio. So that's what I'm looking at here. All right, so these are all, this is just on the growth side for all of these searches and investment plans that we're looking at. Again, the takeaway here, my point of doing it this way is to show you the power of relative safety and the power of, you know, keeping it simple. The DEW, confirm call goes up, I go buy some good quality stocks and I put a prudent stop on it. It's what VectorVest was created to do for the longer term, more prudent investor. All right, we talked about growth. I'm gonna switch gears a little bit here, go back and share those back tests and portfolios that I showed. We're looking for steady income. Again, I'm not going to talk too much about covered calls here, but let's talk about dividends. Okay, and I think you guys will get a copy of this. You know what dividends are and dividend yield. VectorVest has proprietary dividend indicators, right? So we're shifting gears here, by the way. We're talking about generating income so that nest egg you talk about retiring with doesn't just stay static, right? We can still grow that portfolio as we go. One way to do it is good, safe dividend income. So dividend safety, dividend growth, and then the vector YSG, yield, safety, and growth, create our proprietary dividend indicators. Talk about dividend safety, the assurance regular cash dividends will be declared. You know, the formula goes into that for our DS number. I'll talk when I go into the program, I'll talk about them. Dividend growth. Okay, very important. That's what we're looking for. We want companies that are not only paying a dividend, but continuing to grow them. You guys may be familiar with the dividend aristocrats. Got to be at least 25 years of not only paying, but growing. It's a type of dividend payer we look for. And then there's our overall YSG number that we use. Okay. Here's the search, blue chip dividend payers, just very basic on the US side. It uses the Dow, transports, utilities, and the S&P 500. So there are other great ones in our other programs. I'm going to share those in just a moment. Let's jump back into the program. So if I go back here and I look at my portfolios, again, this is a long-term blue chip dividend portfolio. The management has me only in 4 positions now. I have a lot of cash on the sideline. Once this, you know, the volatility is gone and we get that confirmed up call, we will repopulate. It's a 10 stock portfolio. So we're going to have great the ability to grow it from here. Keep in mind, this is only the capital appreciation. When you add the dividends to it, and I used to track them, but it gets very time consuming, but there's about it's about a 19, almost 20% annualized rate of return doing this. And when you look at this, you look at the purchase dates. I mean, you don't do a lot of trading here, right? We are down to just the 4 positions that were bought back in, in 2023, and then in 2024, the others are traded out. And this is a great, I don't have my scroll here. I've been having an issue with that. I can't scroll over, but the dividend yield, just to make it onto this list, has to be at least 3% at the time of the purchase. But what happens, all of these positions have a decent return on investment right now. That's why they're still in the portfolio. So that yield goes down a little bit, but not because the dividend's going down, right? So the yield comes in because of that inverse relationship with the price of the stock. Like Amgen, the yield is a lot lower than from when we bought it, right? We bought it at 225. It's trading at 281. Coca-Cola, 58.5. We paid, it's trading 71. Same thing with Paychex, right? So that yield will pull back a little bit, but it certainly doesn't mean the dividend has changed, right? So that's blue chip dividend payers. That's steady income. And by the way, at least on the U.S. side, and maybe in the other countries, if you can, I advocate strongly just selling covered calls against these at any time to continue to generate the income there as well. So that's blue chip dividend payers. If I take us into Canada, what I want to show, we don't have blue chip dividend payers in the others, but start with the Canadian database here. I've taken a couple out, pale blue chips and steady eddies. Okay, these come from the conservative folder. These are searches and investment ideas I want you to take the time to look at, because they do what I said earlier. Dr. D talked about the best of both worlds. Okay, the best of both worlds. I get capital appreciation as well as dividend income is on top of that. Let's start with pale blue chips. Again, same time frame. This is just a way to illustrate it to you. I use Greenlight Buyer. Actually, I use this one from the Trading System Viewer. Right. So if you're in Canada and you want to set up a pale blue chips portfolio, go to Viewers, go to Trading System Viewer, and I usually just sort it by name here. And I'm going to go down to pale blue chips relative safety. Okay. And then if I go to Trading System Details, you'll see again how powerful and how basic this can be. Bring this over here real quick. We're sorting pale blue chips by relative safety in this particular portfolio. Again, 50 gain, 20 loss, I think is a very prudent stop criteria. Max stocks per industry is 3, maintaining 10 positions. Okay. We are going to cash here on the confirmed down calls. Right. Greenlight Buyer is it's ruled down when the confirm call goes down. Right, so we are going to cash there. Let's go back to the portfolio and take a look at how that performed. Now, this is again starting from January of 24, 35% return. Okay, and you see the stocks that come into this portfolio. I scroll over. Where is my relative safety numbers? Canada, I have a different setup here. Let's do this real quick. I'm sorry, stay with me 1 second. I'm just bringing this over to where we can see it. All right, there's our relative safety indicator. So when you're talking about pale blue chips, you're getting that high relative safety, okay? And that allows us to be in these positions. You see the return on investment here. And what I want to get to is the dividend, right? So this is just the capital appreciation. We have dividend yields ranging anywhere, a couple of them below 1, as high as 4% here, 2.63%. So these are some really nice dividend payouts. Again, as Dr. D said, the best of both worlds. Okay. Now this again is built right into the Trading System Viewer. You can use that one for the growth. There's another great one here, high rising dividends, high CI rising dividends. And there's another one that performed very well, very low drawdown, by the way, on these. Not worried about the drawdown here. And steady eddies is another prudent way to get growth and dividends. Right? You're not going to, you're not going to double your portfolio in a year and a half using these conservative searches. But again, I'll make the argument if 25, 27%, annualized rate of return with that drawdown is not okay with you, please send me an email and tell me why. Okay. But that's found in the Unisearch tool. In Canada, you can go to the retirement portfolio and you'll see there's not blue chip dividend payers in here, but you've got really good dividend payouts. And in the conservative folder, you'll see these as well. Okay. Let's go to, I just want to, again, I'm keeping this best I can to show that all of this really is, universal here. Pale blue chips, same thing in Australia. I ran pale blue chips, green light buyer, confirm call, 36%, 34%, great annualized rate of returns, wonderful drawdown numbers here. And then I also ran steady eddies in Australia, 30% return, reasonable drawdown. Okay. The point I'm simply illustrating here is quality stocks are prudent entry points. Greenlight buyer is about as aggressive as we get. On the US side, we use it for premier growth stocks, but I take a step back from that aggressiveness by making it on every green light. I'm only buying 2 positions, by the way. So I'm incrementally growing the portfolio when I use the more aggressive entry point. Learn that this April and then back in that other drawdown that you saw. Okay. Let's go through one more here. Let's go to EU. So it was the same idea. Here I use pale blue chips again. Look at the returns here. Right? About a year and a half, reasonable drawdown, a little bit more of a drawdown here. The 62% return, 47% annualized rate of return. Okay. All I'm doing is using confirm calls and rec equals sell. You can tweak that to wherever you're comfortable, of course. You can come in here and tweak. This one, we're not going to cash in a confirm down. We're not using minimum stocks per industry or sector. Right. So remember, you can come in here, start with the basics, run these back tests if you choose to, run a model portfolio to track it so that you're comfortable doing it, or take it from Dr. DeLito and myself that combining the proper market trend with high RS stocks, with high quality, fundamentally sound stocks, and building those portfolios and managing them is what's going to, again, for the more prudent mind. I know there's a lot of traders here, and I know a lot of folks. If you're still here and you find it boring, but you're still here listening, I did my job. I know, a lot of people are still looking to trade, which I do too. But my goal here was to share. I'm going to keep scrolling through here. We went through all of these. I'm getting close to the end of my run here, so I did go through this a little quicker than I wanted to. But listen, if you can, wherever you're watching from, I know the options are a little less liquid in a lot of places. Just some examples of what we call the buy right. This is generating income, what I call the side hustle. You buy 100 shares, you sell a call against it. We did these actual positions. Now, some of these slides are a little older because I didn't want to get too far into it. Doesn't matter the time or the stock, but we bought 100 shares. We sold a covered call against it at a cost basis of 111. You know, a week later, we sell it. We have a 4% profit in a week. And my answer to that always is people say, well, you know, it's 435 bucks, 4%, you know, who cares? And I say, if you had a dividend paying stock that paid you 4% return a week, you'd be pretty happy with that dividend payer, I think. I hope. There's some buy right guidelines here that we use. They're guidelines. 5% return on the investment, premium received at least 2% of the price of the underlying stock. We use a industry standard expiration of 30 to 45 days. Open interest, we need liquidity. This is where it becomes an issue for some of the other countries who are doing this, but and we're never going to hold them through earnings report. 2024 was a great year. 2025 has started off a little slow, but like I said, we had a winner yet one day, you know, made a nice profit. We've got a couple of trades that are in the green right now, but 2024 was a great year for writing the portfolio, so it worked out well. Okay. And then finally, protect your portfolio. If you have the ability to buy, whether it's putting in contra ETFs or if you have the ability to buy protective puts, my old Mark Twain quote, don't just sit there and worry, do something about what's worrying you. So we can reduce risk by buying put options to protect individual portions, individual stocks or your overall portfolio. Again, just a quick example. Usually we do 3 or 5 contracts. When we do the bear put spread, we do 10 contracts, but just again, it's the takeaway here I want you to have. When you're managing your portfolio by selling calls against positions you have, that's a defensive measure in a toppy or uncertain market. Buying protective puts, or maybe you buy contra ETFs, we mitigate those drawdowns, especially in the growth portfolios. It's not hard to do, but here, you know, we made over almost 100% return. We entered it on 827, closed it about a week later for almost 100% returns. That just goes towards mitigating the drawdowns that we have. Okay. You can retire with peace of mind knowing that you can steadily grow your portfolio, generate income, and preserve your capital. This is just today was a 30,000 foot view look at what you can do. It's universal throughout all of our programs, whether you're in Europe, Australia, Canada, the US, I don't care. Relative safety is a universal indicator that will allow you to buy good quality stocks at the right time. Again, you're looking to day trade, this presentation might not have been for you. If you found it boring but helpful, then I made my point. On that note, Rick, 2 minutes over, I think, 3 minutes. If there are any questions, anything I can do to help out, I'm happy to do that. And again, it was just, I hope, a decent overview of how successful you can be using VectorVest in its most basic way, the way I was taught, the way Dr. DeLito created it. So hopefully you take that away and build on what I talked about here today. But thank you all for sitting through it.
And you're going to be docked on Monday for going over there, Jim.
That's you were supposed to stop at 1:15.
I knew it. I knew you were going to hold that against
I'm just kidding. I'm just kidding. I'm going to stop sharing my screen for you. And
yeah, well, you can leave yours. I
stopped.
I'll bring mine back up.
There you go.
But yeah, thanks so much for that, Jim. Another great presentation there, and I think everybody loved when you said, "Hey, if I'm boring you," because you got a bunch of comments there. So Badger said, "Helping me add boring profits to my portfolios for the last 8 years. Thanks for the boring ride."
There you go. That's great. Great to hear.
Yeah, and
Terry, thank you. I'm glad to see you
yeah.
here as well. And Carol,
I'll
thank
take
you guys.
boring and making money any day.
Yeah,
All
it's
right.
just, it's a little different look at it. Listen, I could be very unboring. I can be pretty crazy with my trading. It's just not what my job title has me do on these presentations. So,
And and you know, Jim, talk about boring. So I was going to use ruler stocks uh for trade ideas, but because I knew you were coming on from the retirement side, I figured, well, I won't touch ruler stocks.
Yeah.
We'll just in case there's crossover there. And you know, while you were presenting, I was looking through ruler stocks, and there's some really nice setups there if this market can keep ignoring the noise and keep going. All right, so let me. Yeah, there we go. We'll look to close out here. So, folks, we'd like to thank you as well, and those folks putting thank you in, we'd say you're welcome. Um, Yeah, we're a little bit over, but we'll
Yeah.
close it out here. And I do want to thank Jim
Sure.
once
Thank you.
again for
Thank
excellent
you, everyone. Thank you,
presentation.
Rick. Thanks, everybody.
And folks, we do have Clay in the background who got everything going, kept everything ship shape, and kept Jim and I in line. So we'll thank him as well. So once again, thank you. Thanks for spending part of your weekend with us. Maybe I'll be talking about some of those um, ruler stocks during the Tuesday Q&A, some of those setups there, because there were definitely some nice ones. But as usual, if you do have any questions, need any help at all, don't hesitate to reach out to product support and training, 1-888-658-7638. And Stuart, you've got my email. Sorry, I was typing a response and I kept going over the allowed limit in the chat there and had to keep backing out. But yeah, very good idea. I just don't know if there's history there at all on the Canadian side. Like, I do believe there was a jockey club in Canada at one point before my time. So I'm not sure if there was one, why that went away, but we could definitely have a chat, um, you know, by some means, and I could take that forward and see what the thoughts are. All right. So with all that said, as we said, replay is available on the VectorVest YouTube channel immediately after the webinar. You've got support@vectorvest.com email there. You've also got Ray's email. If anybody does have any suggestions for future international forums, you got my email as well. If you'd like to send it to me, that's fine. All right. But that's it for now. Stay safe and healthy out there, folks. Have a great rest of your weekend, and we'll catch you back next week, back in the markets. Bye for now.